Good morning. It is July the 11th, 2016. We'll start our countdown to France's National Day, July the 14th. Tends to kill market activity, the 4th of July and the 14th, as a lot of players are on vacation, but we have a lot of overnight news that's driving the markets. I've put a lot of those headlines up. China's equity money managers have set aside $300 billion to act as China's plunge protection team and buy securities when the markets start to sell. After Bernanke visited Japan last week, the headlines were Japan to add another $10 trillion worth of stimulus to their economy, to their markets. So equities are up around the globe. Now, that rally started in the United States on Friday. It did not start in Japan and China off of this news, but that news certainly added fuel to the fire. Going around to Europe, Deutsche Bank's CEO said that the ECB had to add $150 billion to euros to their banking system to shore it up, and so I mean it never stops. Where do you stop this? Where do you draw the line? Where do you finally say enough is enough, we can't do this anymore? And nobody knows where that number is or what comes from it. So the banks have chosen easy money, zero interest rate policy. The Fed pays the banking system money on their overnight deposits, which means they don't have to lend money. They know that interest rates, at least as far as the Fed's concerned, aren't going up by much. So they can take their extra funds and they can play the spreads between 2 years, 5 years, 5 years, 10 years, 7 years, 10 years, 10 years, 30 years, and make money and not have to lend money or take money doing that. And if they do lend money, then they're under the Frank-Dodd restrictions and new criteria. So boil it all together, banks aren't making loans except to those people and entities that don't need the money. So the stimulus, they don't have to stick their necks out to make money, and they don't, and they're not. So that's not working as the way the Fed hoped that it would work. So I don't know where it ends. I don't think it'll end in the United States until a Republican gets elected to the presidency, and then come December, interest rates will start rising. If a Democrat, if Hillary wins, and on paper it looks like she might, policy will stay the same. So central banks keep kicking the can down the road, hoping like the Dickens that the economy is going to start to improve, and their bureaucrats, on the other hand, are increasing rules and regulations, making that more difficult. And because these government entities are not generating the revenues because of slowing economy, they keep raising taxes. So it's just a centripetal pull down to the hole where we all know this thing ends. So for us as traders, it's good. If it ever starts to sell, we can make money and we can prosper in that. But most of the world can't prosper. So right now, stocks are up, treasuries are lower, and that probably will continue. The E-mini, we've been talking about it, that 2135 is going to come out sometime this year, didn't know when. Certainly by the presidential elections. From a timing standpoint, they would have liked to have run it up right in front of the election, but it looks like it's going to happen early. So the political meme will be, look how great the economy is. Just look at the stock market, folks. What do you mean things are wrong? And that'll continue. So here we are pointed lower. I believe our market treasuries will be lower today, but they won't break. So we have rejected prices below 133.04. You can see it volume wise right there. You can see the single print. So this 8 to 12 area is our first little band of support. So 9s to 13s will be buy 1. 1 to 5 will be buy 2. And you know we like our number 2 areas better than our number 1. On the sell side, 19 to 23, sell 1. 27 to 31, sell 2. And we're going to put a question mark at 15 right here. Depends on how strong the E-mini is off the bat. It may take 15s to get in, but right now we're going to hope we can get 19s. Okay, looking at the 30-year, we're at 17 right now. The last rotate up was 23, so 20 to 24 would be that first little band of resistance. Sell 1, 27 to 31. Sell 2, 3 to 7. Kind of like the short side better this morning, as you can see. On the buy side, we have all this volume, 15, we have it at 12, we have the last rotate down stops, so we'll make 8 to 12, 1, 1 to 5, buy 1, and then 21 to 25, buy 2. Leaning against this area right down there. Let them get stops beneath that, and that puts us in our buy 2. So you can see that the sells are clustered together tighter than the buys are, because I think the market's headed lower initially. Then it'll be down to what's the E-mini going to do. And right now I'm guessing we're probably going to see new contract highs today. Gold, when I looked hour and a half ago, was sideways. Haven't looked at it since. I imagine it probably still is. And we had our close at 54. So 75 is pretty stout resistance. Have the London high at 64, 65. We're at 59 right now. So 60, 63, sell 1, very, very close. 65, 67, sell 2. On the buy side, 54, 56, buy 1. And then 51 to 49, buy 2. Like the buy against 1350. 60 to 62, 63 is aggressive. And it's that first rotation. Otherwise, we're really 65 to 70 is where we're looking to get short. The market is pointed lower right now, and going to get in short early. Probably takes a pretty aggressive entry. Okay, the euro is pretty quiet compared to what went on in the yen. It really, you would have expected it to react a little more strongly than it did, and it's just kind of sitting there. So the euro's got its own problems. What's the next round of stimulus coming out of the European Central Bank or the EU to support their banking system? And a lot of what Europe hopes to do is to increase their exports through a lower euro dollar. So not much of a rally here compared to what went on versus the yen. So looking at where resistance might be, 111, sell 1. And we're currently at 73 and the high is 88, so we've got a P. I'm kind of counting on that follow through on the P. Sell 2 at 1125. On the buy side, 1050. And then 1025, buy 2. Crude oil got whacked overnight. And usually when the stock market is stimulated, it does manage to find a way to rally. So the London low came in just above 44.50. So 44.50 to 75 is buy one. 44 even, 44 and a quarter is buy two. Pick up this high volume area right down here. On the sell side, 45.26.50, sell one. 45.75.46, sell two. I see a trading range there, really. A seller against 46 and a 45.50 to 46 is the sell zone, and then 44.50 is the buy zone. New contract highs in the E-minis, what I see. And bear in mind the rally that wasn't really mentioned in all the articles overnight started in the United States. And we are the dog. The rest of the world's equity markets are the tail. So we've got that 2134, 2135 resistance area. And we're pretty darn close to it, so I don't see any reason for it not to come out. So failure to take out and hold 2135, I think, will set up a short. And so our sell zone is 30 to 35, then 39 to 44. I mean, 2150. I mean, why not? To me, if 35 comes out, that's the next stop. Probably not today. On the buy side, we're at 27.50. So 23.25 buy one. And then 16 to 21 will be buy two. The news today is labor market conditions indicator minus 4.8 was the last one. Nobody will pay any attention to that. It's going to be whether the E-mini can take out current contract highs or not. Like the buy side better? Going to take a bit to get everything up and posted. Going to get busy on that. I will be back with you as soon as possible.